Hello, everyone. Today, we're going to discuss the challenge facing reopening for business. As a small business owner, on one hand, it's good that we are getting ready to reopen. On the other hand, there are challenges ahead. There's still uncertainty facing the public health crisis, and there's still consumer confidence that we need to take into account. What I have found that there are two ways that we can do right now to maximize our chances to survive and to thrive under the new normal. Let's begin. In time of crisis, you have to prioritize and execute. This is a former US Navy SEAL that he said in his best-selling book and his TED Talk. What that means for a business owner right now is to focus on a core business, prioritize necessary costs, reduce or even eliminate the rest, and maintain liquidity. How do we do that? What I find is that we do a 13-week cash flow forecast that gives you the clarity on what to do for the next quarter, given the uncertainty facing the public on public health and consumer confidence. Because this way, you have visibility on the level of time you can maintain the operation, evaluate different what-if scenarios, and to set goals to keep your cash positive. As we all know, cash is king in any business. This is what the cash flow forecast looks like. It gives you an idea or image of when your cash runs out if we don't do anything different. The second picture shows the positive or negative cash flow if we keep the same thing, keeping just the regular rhythm of collecting the outstanding invoice the customer have not paid, or paying the same time the invoice what we owe to vendors. So this is a very powerful and visual tool for you to know where you stand. And in order to do that, to have that visibility, I do require a few things. I know we're not perfect and neither are our records, but try to have a profit and loss, because the first thing you need to understand is where your top source of revenue comes from. And then what are some of the key expenses, the payroll, the brand insurance, marketing. And then the second thing is the open invoices. Those are who owes us and when they're supposed to pay us. The last thing is unpaid bills. This is what we owe to other people and when we are supposed to be paid. So the last two things are anticipated or expected, either source of cash in or the source of cash out. The first step is to understand where you are. So having your bank statements, knowing what the cash that you have on hand, that gives us a starting point of how long you can maintain your operation. The second part is to calculate the money in. As we talk about, those are the cash that we are supposed to collect from customers or clients. It may be also loans or personal saving, or PPP loan you got from the SBA, or unemployment if you're a self-employed gig worker that you're supposed to get the pandemic unemployment assistance payment. Those are the sources of income that comes in that may be used to keep yourself afloat, right? We have to be creative here to increase the monies in. One way to accelerate your account receivable and collection is to look at your customer in detail and say, hey, this person, he's like that, he works in this industry. So you personalize your approach to ask for the payment, work out a payment plan with them. So at least you get something into your hand. Like I alluded earlier, explore relief funding options, loans, grants, unemployment income. And the last, to think of creative way to adjust your business model and increase the revenues, such as set up online sales, offer services remotely, even if your office are closed, maybe sell prepackaged certificate with tiny small discount, at least you get the cash in. The second way to help you maintain your cash liquidity is to manage the expenses out, manage the cash out. So here we talk about how we manage the key expenses, prioritize those necessary, and to reduce or eliminate the rest. So in this scenario, we're looking at all the expenses and liability that we have to pay to keep the lights on, to keep the place open. So you have rent, advertising, insurance, possibly loan payment, utility, right? And when we explore the what if scenarios, those are the ones that we need to think creative as well. For example, the second way to maintain your cash liquidity is by reducing money out. So for the fixed expenses, let's see whether we can lower or defer them. Those big ones are rent, insurance, and payroll. They're pretty easy to identify, and lowering them can have a substantial impact on available cash. Check the current bill status. Other bills, the vendor may have some flexibility in terms of timing or the amount that you need to pay them on deadline. And to explore other options to defer loans. Talk to your lender to see whether you can have forbearance. Talk to a government agency to work out a payment plan. Again, get on the phone. The other way is to reduce your money out is by cutting back discretionary spending. There's a wide range of expenses that can be controlled and not necessary. When times are good, we tend to be lax about examining those expenses. If you have auto pay set up, stop them, turn it off until you prioritize those spending. If there's monthly or quarterly orders, membership, subscriptions, suspend them or even cancel them. The next one is something trickier, the advertising and marketing. Those budgets typically have some flexibility, and you may want to delay them for the next few months. But I do want to caution a little bit to keep some money for marketing and advertising, because everyone is holding on to their purse, and for you to spend on the one that generates revenue for you may be a wiser investment than not spend it. Again, this goes back to prioritization of your business and the priorities. So we are the CPA Plus Profitability and Growth Advisor, helping small business owner to navigate any situation, especially now when you're ready to reopen. Make sure that you can run further and faster than your competition. Good luck.